Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is July 5th edition of Market Outlook. Don't forget to sign up for this and get it free every week by going to www.marketgauge.com, and you'll receive this free text and video version of a weekly market update. Well, obviously, everyone is sitting on pins and needles waiting for the referendum in Greece to decide whether or not they're going to accept more austerity or not, or maybe. Let's get into the markets right away. Definitely global markets on edge. We're going to get into that in a moment. First of all, let's talk about probably one of the more interesting charts regarding U.S. equities is the S&P 500. As you can see, I've got an interesting channel line here that goes back about 6 months or so. So we have this sort of top of the channel, bottom of the channel, which we tested but held the 200-day moving average. So the question is the Greek vote and the market's going to react in such a way that puts pressure on the markets where this down action here and what looks like a potential up flag if it trades down below the lows of last week, which is about 205.50, or all of this is sort of a bear trap and powers up another move and a potential test to the upside. So anyone's guess here. It's in terms of looking at the technical pattern. You can say there's two interpretations. One, again, bounce off the 200 is underway. The other is that it has broken down, and under the 50, the 10-day moving average is declining and the market is under pressure. So again, in this case, we have to follow what the market tells us and be prepared for either case. Let's take a look at some of the market internals and sentiment. Well, interestingly and not surprisingly, on that large sell-off, VIX, for the first time since February, VXX, that is tradable, not the cash index, and again, there is some tracking error and quite a bit of it, but nonetheless, the market did trade convincingly above the 50-day moving average for the first time since February. So in essence, we tested the bottom of the Bollinger Channel, which shows pretty extreme frothiness, and at the same time, the market then on that extreme responded as one might expect, with a substantial move to the upside and now closing above the 50-day moving average. So definitely more cautionary tone in the market. But again, if you look at VIX on an absolute basis, we're really trading very, very low. Now, another thing we like to look at is short-term volatility versus longer term. So we look at the two cash indices. Above 1.2 is considered, getting frothy. Around the 1 level, where it's the 3-month and the 1 month are trading about flat with each other, we got to, after that 350 point move down, an oversold reading and have bounced. Now, that in itself is construed as a potential buy signal. So sentiment definitely oversold on that 350 point drop. We did so far get about a 1% rise off of that, but actually let me go back here and just show you some other interesting action as well. You can see that since actually 1, 2, 3, 4, 5, about 8 days in a row, we have not been able to close higher than we've opened. Now that is a pretty interesting pattern in itself. So that could be seen as a potential change or early indication of a change in trend, although the sequence here of that many days down in a row is in itself interesting indication. So Maybe we get a couple of follow-through days, but generally speaking, that might be considered a potential start of a change in trend. So if you're getting a mixed picture here, it certainly is one. Okay, so going back to the volatility here, you can see we definitely touched down at the lower end of the bands on that 350 point move down on the volatility ratio. Let's see what happens. And again, this is unusually highly driven news market. Let's take a look at some of the market indicators here. Again, same type of scenario with the McClellan oscillator, where we got to overbought readings on the 350 point down move and started a bounce. So you can say certainly, as you can see here, the level which we've gotten down to on a intermediate term basis, which looks out for us going out 2 to 3 weeks, certainly got to oversold, and now we have definitely pushed that into a buy signal. Let's take a look at TLTs, bonds. We've been looking at that, and again, pretty much a flat week to slightly down in the bonds, but pretty much neutral in terms of the overall price action for the week. We still closed under the 10-day, the 50s under the 200. We're in a bearish phase, but towards the end of the channel. But we're not neither overbought nor oversold. Again, the Greek outcome is going to have some sort of an impact on the bonds here. But again, considering the situation in Greece, the fact that the bonds have not moved lower in yield and moved up here is surprising as well. We did get, on the sell-off, a bit of a rally in the bonds, a little flight to safety, which quickly abated. So again, towards the bottom end of the channel, but still, again, the 113.50, 113 level, and then getting wrung out on the RSI would be a good combination for a potential cover if you're short rates here or long TBTs, as that would definitely be at the bottom end of this this channel now that has formed, and it looks pretty well intact. So looks like, again, same scenario as last week. Can get a little bit more wrung out. Maybe it even drops through the bottom of the channel if the news in Greece turns out to be a yes vote. On the other hand, we are definitely potentially at the short-term low levels here. So this can play out depending on the news, again, in a way that propels a move back up potentially to the 200-day moving average. But overall, it looks like the longer term trend in rates is definitely under attack. And again, even with the news and the potential volatility, bonds did not respond very strongly with a flight to quality last week. That in itself could be an indication of which way we're going. Let's take a look at some global stock markets here. So a couple things to note in the global equities markets. The 20-week moving average, which is a pretty good sense of the intermediate term trend on the weekly charts, has broken down, and there's only one real standout so far, is Japan. Japan seems to be holding its 20-week moving average and holding above the recent breakouts from the recent multi-year highs. Now, if you take a look at that and compare it to, let's say, the S&P 500, we have the 20-week, the 65-week, and the 200. So first line of defense is this 20-week moving average. We closed under it for the first time. Now, obviously, with the looming news of Greece, that's going to have a major impact. And we know if it takes out the lows of last week, which is on the daily chart, the 200-day moving average, this thing is definitely going to be in for some trouble. On the other hand, positive news could bring this back over that 20-week and the long-term trend reassert itself. However, just looking at the markets on a global basis, look, China broke down for the first time in quite a while, in over 6 months, beneath that 20-week moving average. Switzerland broke down hard. India still well under the 20-week, but actually on a relative basis, its performance for the week not bad, but still not strong enough. Russia also closed at or under that 20-week moving average. Spain sharply under, very poor week. So again, looking at these 12 global markets, lots of pressure. Again, a lot of that can change depending on what the outcome in Greece is. But overall, markets are under pressure. In fact, the global index with a short bias, right? So this works inversely, actually popped above this 20-week moving average. So it's interesting. Markets are definitely on pause here. Now, the exception, DBA, agricultural commodities, definitely extremely strong. Take a look at DBA, which is a ETF of a bunch of different ag, and you can see we moved up from about the recent lows around the 22 level all the way up to 23. We are in overbought territory as we attack this declining 200-day. But look at the spacing action, and if you look at the weekly charts, going back, you can see we basically scraped down on the lows going back to around the financial crisis. So on an absolute basis, ag commodities extremely cheap, look to be bottoming. The key other thing to look at is the lead, which is corn. We had some issues here with corn plantings, a lot of water, maybe too much, and corn had a monster move. Look, we went from 23 all the way up to 26, so a good 10 to 15% move in corn. On a weekly basis, the thing to watch here is if we can take out that 65-week moving average and at the same time confirm this double bottom. So key level in corn ETF above 28. Again, that would confirm the double bottom. So as equity markets are in pause mode, ag commodities seem to be on the upswing. So that's an interesting counter-cyclical move. That's it for now. Have a great week. Stay frosty. This Greek vote is definitely going to create some volatility in the markets, and I'm not sure that anyone really knows, regardless of the vote, how things will play out. Thanks, and bye for now.